Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario where we are looking for a wave 4 to finish and another wave 5 to the upside. Resistance to the upside is the monthly gap top at 53.3k, and above that we have the blue box here between 56.8k and 57.3k. The common target area for a wave 4 is the green box here between the 236 and the 05, taken from the low of 2 to the high of 3, giving you a target between 50.3k and 47.3k. A less common target is between the 146 and the 236, which is between 51.3k and 50.2k, which, as you can see, has been hit. Now, what is important for this wave 4 at the moment is time. You can see the vertical lines on the chart taken from the high to the low of 2 and then put on top of the high of 3 with the Fibonacci time tool. Now we are comparing wave 2 with wave 4 in time. Preferably this wave 4 is not going to be 5 or 6 times longer than wave 2. At the moment, the low here is made on top of the 4-fib time, which is still fine. The 5-fib time is sitting at 1 a.m. tomorrow, Friday the 23rd of February, Central European time, and the 6-fib time is at 1 p.m. on Saturday, Central European time. Preferably, we are not going to go into the weekend while still being in this range. Preferably, we're already going to move out of this range and then during the weekend start another range somewhere else. If we zoom into this wave 4, then the structure we're looking for is a WXY sideways double combo. The most common target area for your wave Y has been hit between the 0.618 and the 1.236, which is 51.1k and 49.7k. Wave W can only be one of two structures, a zigzag or a flat structure. But for a flat structure, this move to the upside here did not go high enough because you have to hit the 0.9 Fibonacci taken from the high to the low, which isn't the case. So therefore, we're looking for a zigzag in a wave W. Then we have X, and then wave Y can be either one of two possibilities. A flat over here, and then a wave A, B, and then eventually a wave C, or a bigger triangle. If we look at the flat structure inside this wave Y and then a wave A, B, and then a wave C, we would still be looking naturally for another low and then a wave 1, 2, 3, 4, and then a wave 5 before continuation to the upside. Preferably, this wave C is not going to touch the 2-fib time taken from the high to the end of wave B over here. A wave C hitting the 2-fib time, currently sitting on Friday the 23rd of February, 2 a.m. Central European time, is going to lower the probabilities for this to be a flat structure. If we look for a triangle in this wave Y, then it's still very, very early, right? We only finished a wave A in this particular scenario. We're still working on a B. We need a C, a D, and an E before continuation. That will take a lot of time as well. Now remember, with that wave 4, right, preferably, we're not going to go to the 5 and the 6-fib time. Preferably, we finish a structure before reaching the 5 or 6-fib time. So therefore, this scenario does have a bit of lower probabilities, and it's also very, very early to call a triangle because we only, in this case, would have finished a wave A. In the bearish scenario, we have finished a wave 5 over here, and we are looking for a bigger retracement to the downside. And we can only get a bigger retracement in one of three ways, an impulse diagonal or a double 1-2. Now in this scenario, you can see that the wave 5 here has an expanding structure, which has low probabilities because expanding diagonals are always rare, never preferred, never get the highest probabilities unless all of the other stuff fails. If we then look at these scenarios one by one, then we start with an impulse to the downside in a wave 1, 2, and then eventually a wave 3. What lowers the probabilities for an impulse to the downside is that this wave 2 is almost 10 times longer than this wave 1, which has low probabilities. If I put this fib time on the target for a wave 2, then you can see that a wave 2 can easily go to the 3A2, to the 3 or maybe even the 4 fib time of wave 1, but going to the 10 fib time is incredibly rare, never preferred, lowers the probabilities for this scenario. If we look at a diagonal structure, then in a diagonal, we would have finished an ABC to the downside. In a wave 1, we look for a 2, 3, 4, and 5, a bit of a ranging, grinding structure to the downside. Common target for your wave 2 in a contracting diagonal is between the golden pocket and the 886, which is between 52.1k and 52.7k, and the 05 to the golden pocket area is a little bit less common, the 05 sitting at 51.8k. We're then expecting a wave 3 to the downside, which also has to be a zigzag, then eventually a 4, a 5, then get a wave 2 before then impulsive continuation to the downside. If we look at the most bearish scenario, we're looking for a double 1-2 and then expect a big wave 3 to the downside. The first wave 2 retraced to the 786 Fibonacci taken from the high to the low of wave 1, and the second wave 2 is being formed where a rare target is the 886. The moment the 886 is hit, probabilities are very low for this scenario. The invalidation is taking this high. However, what also lowers the probabilities for this scenario is that we are not seeing any bearish CVD divergences here between the high and the lower high, or this high and the highs over here at the moment. Instead, we see some bullish CVD divergences, and that's not really what I like to see when we look for a very bearish double 1-2 to the downside. So here you have the bullish CVD divergences. We had them at the low, but that was a bit tricky as we also hit the 886 over here, not a common target, rare target for wave 2. But here we also saw bullish CVD divergences forming, and these already played out as price took the high. Now we also hit the 886 from this high. Take a fib from the high to this low, drag it to the right side, and you can see the 886 is touched, increasing probabilities to take this high sooner or later. So if we then look at the probabilities of the different scenarios, then on the 4-hour time frame, the highest probability is that we are in an impulsive structure, a 5-wave move where we're looking for this wave 4 to finish and move towards the upside. This wave 4 might already have ended over here, but that depends on the structures we get locally, because at the moment it's quite difficult to end the structure there. On the 1 hour, the highest probability is that we're looking for a WXY sideways double combo where the target area for wave Y has been hit. Another low or continuation of the range is preferred based on the local structures, being then a flat in an ABC or a potential triangle. So generally, we are looking for the trend to continue towards the upside. Though ending a correction at the current low is not very easy, we do have the bullish CVD, so we keep an eye on structures that are yet to be formed, which could change the probabilities very locally for continuation to the upside, looking for a 5 before the weekend. Time-wise, we prefer to finish this bigger wave 4 over here soon, or have it already finished, because we are approaching the 5 and the 6 fib time. So that is something that also plays a role, because I don't really like to go into the weekend and not yet finish this wave 4. So let's see what we get today, and of course also tomorrow. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.